Hello everyone. In this lecture, we discuss about the concept of the leverage. Actually, leverage tells us about the effect of fixed cost on the returns of any company. And if we talk about the fixed cost, uh, there are two types of fixed cost in the financial statements. Like I have a performer of the income statement here, and you can see from this performer, one is fixed operating expense. If we talk about the fixed expenses from the income statement, one category is fixed operating expenses, second is interest expense, and third is preferred dividend. So on the basis of these three fixed expenses, we can categorize these fixed expenses into two categories. First is fixed operating cost, and second is fixed financing cost. So this is the fixed operating cost, and in fixed financing cost there are two categories. One is interest expense and other is preferred dividend. So I will call this as a fixed financing cost because we have a two sources of financing. One source is debt and other is equity, and the cost of debt is interest expense and the cost of equity, especially preferred stock, is preferred dividend. So these three are the fixed costs, and actually in leverages we calculate the impact of these three fixed costs on the returns through leverages. So there are, if we talk about the leverage, there are three type of leverages, and types of leverage. First is degree of operating leverage, and second is degree of financial leverage, and third is degree of total leverage. So actually there are three types of leverages: operating leverage, financial leverage, and total leverage. And I can explain these three leverages through income statement. So we can calculate the operating leverage by using sales and EBIT. So this area is called, through this area we can calculate operating leverage from EBIT till EPS. By using EBIT and EPS data, we can calculate financial leverage, and by using data from sales to EPS, we can calculate a total leverage. So actually when we calculate operating leverage, we just cater one cost, which is fixed operating cost. If we want to calculate the impact of fixed operating cost, we calculate operating leverage, and the formula of the operating leverage is percentage change in EBIT over percentage change in sales. And if we talk about the degree of financial leverage, cater the two fixed cost, impact of the two fixed cost. If we want to calculate the assess the impact of financing cost on returns, we calculate the financial leverage, and the formula of financial leverage is percentage change in EPS over percentage change in EBIT. So, and last is degree of total leverage, and if we assess these three costs, impact of these three fixed costs, which is fixed operating cost, interest expense, and preferred dividend on returns, we calculate the degree of total leverage, and the formula of the degree of total leverage is percentage change in EPS over percentage change in sales. So that's how we can calculate these three leverages. And actually this operating leverage also tells us about the impact of change in sale on change in EBIT. Let's say if, as a manager, if you have a question that if our sale will increase at a rate of 10%, then how much EBIT will increase? This can be answered by calculating a degree of operating leverage. And if your manager asks about if your EBIT, yeah, like sensitivity analysis, if your EBIT will increase by 5%, then how much EPS will increase? If your EBIT increase by 1%, then how much EPS will increase? These all answers can be answered by, these all questions can be answered by the degree of financial leverage. And last is degree of total leverage. Degree of total leverage tells us about the change in impact of the change in sales on change in EPS. So let's say if I have one scenario in which I want to calculate if sales increases by 10%, then how much EPS will increase. It can be calculated by calculating the degree of operating leverage. So these three leverages tells us about the impact of fixed cost on returns, and this operating leverage cater the fixed operating cost, cater the impact of fixed operating cost. This financial leverage calculate the impact of fixed cost on returns by getting two other fixed costs, which are preferred dividend and interest expense. And last is total degree of total leverage. This degree of total leverage tells us about the impact of all fixed costs on the returns, and also tells us about the change in sale, impact of change in sales on impact of change in sale on change in EPS. So that's how we can calculate a leverages. This is just the concept of the leverages. In next lecture we actually calculate these three leverages by using a data of company, or simply we will calculate these three leverages through data. Thank you so much.